Joining us now is Joanne Feeney, Portfolio Manager for Advisors Capital Management, $6.2 billion under management. Joanne, it's good to have you. How are you guys positioning broadly for the second half in terms of exposure after a strong first half and now some wobbles here in August?
Yeah. Hey, Sarah. It really depends on the client because obviously we have some folks that are, in retirement, more income oriented. So we're looking for high quality companies that are going to deliver a dividend yield well above the market average. We have several strategies to help them through. But as you pointed out, one area that we are excited by is the bargain hunting consumer, whether that's a Target or a TJ Maxx. Those are good opportunities, or McDonald's, because they also bargain hunt when they're going out to eat, especially in this environment with inflation, coming down, but having taken a pretty big chunk out of the purchasing power of the average, particularly mid-end and low-end consumer.
TJX is widely appreciated, especially after this week. Target, maybe less so, even though it had a decent reaction to earnings. A lot of bearish sentiment around market share losses and what happened during Pride Month. Why do you think it's good value?
Yeah, clearly they had some missteps in managing through culture sensitivities out in the market. That was, hopefully something they've learned from and won't be repeated. But more fundamentally, when you look at the offerings that Target has for consumers, the quality of the product, the attractive price levels, the variety of products in the stores, it's just a solid retail play right now when the consumers' budgets are being squeezed. And what we've seen so far is that while real disposable income have risen for the past several months for the U.S. consumer on average, it's mostly because people have been getting jobs, more labor participation. The average consumer is still struggling to a great degree, and so they do want to go and bargain hunt. And we think, Target offers a lot, and also they have a pretty strong back-to-school opportunity ahead of them.
I wonder, when you say they're being squeezed, how that fits with what we're seeing in household balance sheets. We're seeing these uptick in delinquencies, but low by historical standards, and clearly excess savings still exist. Although I guess is part of your thesis that goes to zero at some point, and then behavior really changes?
Yeah, so Carl, there's two ways to really look at the consumer. One is the individual household, and the second one is the aggregate situation for the U.S. economy. At the aggregate level, more people have become employed. So aggregate purchasing power has risen. More people employed, even though inflation has been high and wages have just recently only begun to keep up with that inflation. The average household has struggled. They've been squeezed on purchasing power. But in aggregate, more people are employed, so the aggregate spending opportunity and potential is still pretty strong. Now we've got folks going back to school. That's an opportunity for a retailer like a Target, and we have yet to face higher student loan repayments coming, relatively small in aggregate. But again, for some households, particularly in the middle class, that's going to squeeze their ability to spend on discretionary items. So that's why we continue to like the bargain hunter opportunities, Target, TJ Maxx, and then again on the restaurant side, something like McDonald's. And by the way, all of those offer pretty decent yield, dividend yield, for our clients that are in retirement and are trying to live off their portfolios in the midst of what still remains a pretty uncertain environment from a macro perspective.
Right. I wonder if you're looking for names that are pretty much North America exposed, or if China or international exposure is a liability at this point.
Yeah, it's really mixed, right, Carl? You don't want to pick a country and say, well, that's the country to go to. What we do in our international strategies is look for particular opportunities all over the world and so go investigate them and select them and try to control for country broad risks. In the balance strategy, which I help to run, we do go for some international stocks. For example, a Walmart de Mexico offers an opportunity to own a stock of a company that's gaining share, where there's a lot of opportunity to offer better prices for the Mexican shopper, and that company that's done well and also offers a pretty nice dividend yield.
All right. Well, thank you for joining us with some of those strategies that you're working on for clients, Joanne. Appreciate it.